Money has originated in original form, but as soon as it was there in its most primitive form, it was frozen. After 200 or 300 years of coins, all governments put their hands and stopped any further developments. Government said it must not develop any further. We were not allowed to experiment on it. Money hasn't been improved. Money has rather become worse in the course of time. And what we have had since in development are matters of government inventions, mostly wrong, mostly abuses of money.
I have directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
And I have come to the position of asking, has monetary policy ever done any good? I don't think it has. I think it has done only harm, and that's why I am now pleading for what I've called denationalization of money.
How do you think that it would work? Would the major banks such as Chase Manhattan issue currencies or gold coins issued? How would it?
Well, the governments can stop people from issuing money. They can hardly stop them from opening accounts in something. After all, in the modern world, hand-to-hand money, coins and paper is no longer the most important. Credits and credit cards are a substitute. So I think we can forget about existing money and existing banks, and we gradually open a system of accounts which will displace money.
That's a fascinating concept. Maybe the unit one day will be known as the Hayek.
I don't believe that we shall ever have a good money again before we take the thing out of the hands of government. Then we can't take them violently out of the hands of government. All we can do is, by some sly roundabout way, introduce something they can't stop.
Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and also take a look at market cipher. So before we start, I did have a question in a previous video from Eric Edits. He wanted me to talk about fib extensions and cycle targets in relation to previous cycles, and just wanted to mention that's something I'm going to talk about in the next video, which should be in a few days, where we'll look more at comparing the cycles and also using those fib extensions to look for targets. So let's start here on the monthly time frame. We did just close this monthly candle a few days ago, and the close came in at around 45.7k. We have been watching this monthly order block here from this red candle in an uptrend. These order blocks are areas of supply and demand. They become of interest later on when we interact with those levels, and they can act as support or resistance. So ideally, we wanted to see Bitcoin close above this monthly order block, above 47.1k. And if that did happen, then I would have turned more macro bullish here and expected higher prices. We can see we did spend time above this order block at around 48.1k, but we closed the month back down inside this order block. It is good we didn't close it below the order block, and currently we are just spending time inside it. So the same thing applies. If we can eventually close the monthly above this order block, it would give me more confidence that we're going to push higher. We did, however, close above the golden pocket here, doing the fib retracement level from the 29k low to the 69k high. So that is a good sign that we reclaimed that golden pocket area. We are still trading above it. And for me, I'm still looking for certain things to happen for me to turn macro bullish. And I did mention those things in the previous video. For a quick summary on that, you can go to the end of that video where I do summarize the 4 main things I'm looking for to turn macro bullish. But for the moment, I am remaining cautious and seeing this as a dead cat bounce until proven wrong. And just looking at the stochastic RSI on the monthly, we did break below this 20 level where the dotted line is. And just looking back at previous bull and bear markets, we can see once we did break below this 20 level, it did confirm the bear market, and we spent the whole year below that 20 level in the bear market. Once we broke back above that level, it initiated the next bull run. The same thing in 2014 here. We see once we broke below that 20 level, did confirm the bear market, and we spent the whole year below that 20 level, once we regained it, it initiated the next bull run. So we are still below that 20 level, so there are reasons to be cautious and expect this is a dead cat bounce. Down to the 2-week time frame now, we do have these 3 order blocks from these red candles in an uptrend, and also this order block from this green candle in a downtrend. We can see we closed the previous 2-week candle inside both of these order blocks, and this is that monthly order block in red. And similar to the monthly, we would need to see a 2-week candle close above this order block, above 48,600 approximately, to become more bullish and try to look for higher prices. And if we do close below this order block, below 45,250, then we could possibly look for coming back to retest these lows. And down to the weekly time frame, we have put in these weekly order blocks in blue, and these are the 2-week order blocks in yellow. We can see we closed inside this order block, which comes from this green candle in the downtrend, and currently we are still inside this order block. We do close this candle in a few hours, and ideally we want to see Bitcoin close above 47,250, and then we could look for these higher order blocks between 48.8k and 50,000. And again, if we close below this order block, below 46.1k, then perhaps we're going to come back down and retest this order block around the 43,000 area. It'd also be good to see this candle close green. To be able to do that, we would need to close above 46,850 approximately. If it does close red like this, it will close as an SFP, which we did talk about in a previous video. This is a swing failure pattern. So when we do a wick above the previous price action, but the candle closes red, it can indicate local tops and a possible turnaround point. Like what happened on this occasion here, we wicked above all the previous price action here. It closed red, indicated a local top, and we came down lower. Also works in reverse with these green candles at the bottoms. We wicked below the previous price action, closed green, indicated a local bottom, and we traveled higher. We see another one here with this red candle. We wicked above the previous price action. It closed red and indicated a correction. And these aren't perfect like any other trading strategy. We see this red candle here did wick above the previous price action and closed red, and we still traveled a bit higher. We did eventually come below this candle, but it wasn't the exact local top as this one was. So we'll have to see how this weekly candle closes in a few hours. We are still above the 50-week moving average, so that is a good sign. That's currently sitting at 45,750 approximately. We are also above the weekly EMA ribbon. This is a collection of moving averages, and we can see we closed above the EMA ribbon here on the previous week's close. The current candle is still above it. We did come down and test it and did get a bounce from it, but I did mention in the previous videos, one of the things I need to see for me to turn macro bullish is for us to spend a whole week above this ribbon without touching it at all, including the wicks. We can see on the recent drop we had, we did wick into the ribbon. So it hasn't met that condition I'm looking for to turn full macro bullish. The other thing we notice is when pulling up the VPVR here, this is the amount of volume traded at certain price levels. We do see a decent spike here, pretty much at the level we're around 47,400. And these spikes can also act as resistance or support levels. So this would be a key area to get above, along with these order blocks on the weekly time frame and those 2-week ones here in yellow, to give that confidence that we are going to push higher, possibly towards the next spike on the VPVR, and also around where that next 2-week order block is, around that 56,000 area. The other thing I've been watching is the RSI here. We can see the stochastic RSI is still bullish. It is above the 80 level, so we are in the bullish control zone. But I place more emphasis on the RSI here. You have this blue rectangular box drawn in. This is between the 50 and 56 level. And on the weekly time frame, this is a good indication of being a macro bullish above this and a macro bearish below it. And just looking back at the previous cycle here, we can see on the bull run in 2016, 2017, once we broke above this level on the RSI, we used it as support all the way up on this bull run. And once we entered the bear market here in 2018, we broke below the level on the RSI and we used this blue rectangular box as resistance all the way down. Once we reclaimed it, it was the end of the bear market and we started the next bull run. So this is a key thing I'm watching. On this previous recovery, we did reclaim it, came back, tested it for support, got back above it, and that was a good indication we're going to move higher. So we need to see that happen. Currently, we are inside this box, sitting at around a 52 reading. And if we do a break below it, it would start to look like that 2018 bear market, where the dead cat bounces came into this box and got rejected several times as we continued the bear market. So some pretty clearly defined rules there for me to turn macro bullish and to indicate if we are still in a bull run or if we're in a bear market, and these are just dead cat bounces. We're also watching the weekly Ichimoku cloud here with this green cloud, and this cloud can act as support on pullbacks. The thicker the cloud, the stronger the support. Can see we dipped into the cloud and we have spent several months inside this cloud. We did close above it here on the previous week candle, and currently we are still inside this cloud. So this can also give us some parameters if we are able to open and close a candle above this cloud, even if the wicks do touch it. Also get above these weekly order blocks here, which go up to 50,000. That would give me a lot of confidence that we are going to push higher and perhaps make new all-time highs. Conversely, coming below this cloud and opening and closing a weekly candle below it would indicate to me it was a dead cat bounce and we're going to continue in a bear market. And going down to the daily time frame now, and I've just marked off some of the key order blocks that I'm looking at. There are a lot of order blocks in this range and it gets too messy showing all of them. So I have just indicated some key ones where we did get red candles in strong uptrends, as they do seem to be more significant. We can see we came up into this order block. We did get a rejection. We came down to this lower order block, which did mark the tops on these attempts higher, and it did act as support. We did get a nice bounce. We did also bounce off this trend line connecting these two highs, and also off the level where we started to get the VPVR support. We did also see doing the fib retracement, taking it from this low where we started to really take off on this move to the top. Now we came back to that 382 level around 44.1k. So there was some confluence with the fib level, this trend line and the VPVR, and also pulling up the daily EMA ribbon. You can see we pretty much bounced off of that ribbon, and we did mention that in the previous video. Once this ribbon flips bullish with the yellow moving average going back to the top of the ribbon on a pullback, you can generally expect a bounce from this ribbon, and it is quite a good trade going long off the ribbon with a stop loss below it. And we were comparing it to the previous recovery from 30k where the ribbon flipped bullish. We came back, tested it, acted as support, and we got that bounce. We are also watching the 50-day moving average in yellow and the 200-day moving average in red. We do see it acted as resistance on this first attempt, and we looked at potential golden cross dates here. And ideally, we want to see Bitcoin get above the 200-day moving average, above 48.4k, and spend some time above it, and then see that golden cross on the other side, just like what happened on this occasion here. And it did lead to higher prices. This is the other thing I'm looking for to turn macro bullish, is for us to reclaim the 200-day moving average and spend at least a week above it. as we looked back on the previous bear market, where after the death cross here, all of the dead cat bounces got resistance around that 200-day moving average. And just looking at the stochastic RSI, we have been coming down here. We have gotten a bounce at the moment. But looking at the RSI and just drawing a trend line connecting the lows here, we see that does line up with a trend line on the chart. And just matching those up, we can see we are still above the trend line on the chart. But on the RSI, we did actually break below this trend line, which could be an early indication that we're going to break this trend line on the chart also, as there is that confluence between the same points on the RSI and the chart. So I think what might happen here is we perhaps come up here and make a higher high compared to the previous high, looking at the bodies of the candles. This would be above 47,500. And if we do close with a higher high, but make a lower high on the RSI, that would be a bearish divergence. And then we could come back down here. Obviously, if we make a higher high on the RSI, it would negate that and give confidence to keep going higher. But if we see some weakness after making that higher high and we start coming back down, then we would expect that bearish divergence to keep playing out and for us to come back down possibly to this order block. It could possibly also come up to this white trend line here on the RSI and retest this trend line where previous support turns into resistance. And if we do get rejected on that line on the RSI, along with that bearish divergence, I would expect the price to come back down at least to this order block between 44,000 and 44.6k. And that may even be a nice short opportunity if we do get that rejection of the RSI. But this is a daily time frame, so it could take a few days to play out. And over to a market cipher now. We're going to start on the daily time frame. We did have this nice move to the upside, and we did get this red dot confirmed at the end of the month, and that did start this correction. Doesn't mean we have to come all the way down. When we are in the green money flow here, these red dots aren't as reliable as when we are in the red money flow. And just looking at the previous bounce here, we can see we're in the red money flow for a long time. We crossed into the green money flow, and these red dots did end up getting green dots on the other side. We didn't get those big corrections. The 2-day time frame does also have a red dot, but that won't be confirmed till the 5th of April. The money flow is still in the red on the 2-day time frame. And just looking back at the 2018 bear market, we can see we stayed in the red money flow here pretty much all the way down. We can see once we came into that red money flow, these 2-day red dots were quite reliable. Obviously this one did get a green and then a red dot, but it did pretty much get the top. And on this dead cat bounce, it did get the top pretty spot on, and also on this one. And again, that was when we're in the red money flow. But again, we have to wait for the 5th of April for this one to be confirmed. But it could be a possible warning sign on a correction. We do close the 3-day candle today, and it looks like the blue wave's closing off, so we could possibly see a red dot on the 3-day time frame. However, the weekly still looks quite bullish here. This blue wave has been coming up. We do want to see it cross the 0 line here to give more confidence on a move higher. And the money flow did stay in the green here, slightly above the 0 line. And the previous bear market here in 2018, we weren't able to get this blue wave back above the 0 line on any of these dead cat bounces. So if we are able to do that, it would give some more confidence that perhaps we're going to push higher and we may not be in a bear market like we were in 2018. The 2-week is also quite interesting. We did get that green dot, but it won't be confirmed till the 11th of April. The money flow is looking quite good here. And again, the 2018 bear market, we did get a green dot in a similar spot, and the following 2-week candle got a red dot. And the one that's got my interest here is the 3-week time frame, which also has this green dot. And we would have to wait till the 18th of April for that to be confirmed. This is interesting because in that 2018 bear market, the blue wave came all the way down here before we got the green dot at the bottom of the bear market. So this would be doing something different if we do get a green dot here. Even looking back at the 2014 bear market, we can see once we cross the 0 line, we didn't get a green dot till the bottom of the bear market. But again, there are still several weeks left before this candle closes and this green dot can disappear. So I do think things are lining up in the next couple of weeks. We will see some volatility and some clear signs as to which direction we're heading in on a macro scale, if we are still in a bull market or if it's just a dead cat bounce. So I think that's about all. Hope you enjoyed that analysis. We'll watch for this weekly close. And again, we're looking for this candle to close green to avoid that SFP we talked about. To be able to do that, we need to close above 46,870. To be even more bullish, we would like to close above this weekly order block, above 47,250. A weekly close below 46,050 would indicate a possible bigger pullback. So thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.